Ladies and gentlemen, every single bull market, every single bear market, every single macro consolidation that Bitcoin has ever seen has been predicted by the rough structural trends of the 4-year cycle. Unfortunately, for the first time ever, we have reason to believe that this 4-year cycle could break. We moved up too high, too soon. We broke all-time highs before the halving. We've got structural trends suggesting an altcoin season 200 days earlier than usual. We've got macroeconomic trends suggesting a traditional market top towards the end of this year or the start of next year, which is about a year early according to the 4-year cycle. We have reasonable doubt here, right? And regardless of what you think about whether the 4-year cycle is going to hold or not, whether it's going to break or not, the fact of the matter is, it is within your best interest to assume it will break. Because if you hold on to your bags in cryptocurrency until the end of next year, blindly, as per what the 4-year cycle suggests you do, and then the top actually comes at the end of this year, you're stuck holding your bags in a bear market, and you're only going to realize you're wrong when it's too late. Okay? So, regardless of what you think about the 4-year cycle, we're seeing preliminary deviations, and it's within your best interest to at least create a plan B. How do we create a plan B? How do we know when crypto is going to top out? How do we know what price it's going to top out if we don't have the 4-year cycle? Well, we can look at other Bitcoin trends that persist outside of the 4-year cycle, and we can also look at the macroeconomic data and also stock market trends. Now, let me be very, 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 very clear, okay, with an example. In this video, I'm going to give you a few predictions, a few observations, right? One of them in particular, as an example, is a $110,000 top in November this year. Let's be clear. The only basis for confident predictions in cryptocurrency comes from 4-year cycle. I'm not confident that that 110K top in November will occur, right? I'm using it as a data point because it's actually mathematically valid. Therefore, if we get to November and we're at 109K, and I've got this data point that says we're going to top out in November at 110K, I'll probably sell, right? But I'm not sitting here and planning my entire financial situation around this 110K top in November based on this weak evidence. That's not what I'm doing. I'm using it as a data point that I can react to if it's relevant at the time. If we get to November and we're really close to that data point and it's looking like it's very accurate and it's playing out well, okay, maybe then it's valid, then I'll react to it. Let me be absolutely crystal clear. There is no confidence in predictions outside of the 4-year cycle. Every single number and every single price I will throw at you today is not something I am confident in. They are merely data points that I'm throwing out there that I might be able to react to in the future. This is a cycle that is more focused on reactions rather than predictions. You need to be able to react to data. Do not sit there and have a number and date stuck in your head and be thinking you're going to sell on that number and date because the data suggests it. The data is not strong enough without the 4-year cycle. This is about reactions rather than predictions. Really nail that into your head. It's very, very important. Before we get into that, just 10 seconds of your time here. The VIP group on Telegram offers altcoin trading signals. We've been doing them for about a year and a half. We've got a 77.51% win rate on every single trading plan, okay? So we've tracked the trading history. That's the total win rate over the course of 150 trades. We've also got a group chat available. You can discuss the market 24/7, share charts, share trading plans, discuss the trading plans posted by me in there with other VIP members. You can get incredible utility out of that group chat and also out of those trading plans. So check it out if you're interested, guys. Let's get back into the content. Okay, first and foremost, Bitcoin monthly chart. I'm going to skim through this stuff, okay, because it's not really worth spending too much time on, especially considering we have a lot to cover in this video. Bitcoin monthly chart. Very important trend with the Bitcoin monthly chart. Okay, we have a structural trend here. Every single cycle, 1, 2, 3, we have these distinctive yellow horizontal resistance lines form. One here, one here, one here. Those resistance lines are reflected, okay, by the relative level on the monthly chart RSI in yellow at 66. What you can see is that every time we've tested for resistance, and I'm circling stuff here, so watch the cursor. Every time we've tested that yellow line for resistance on the price chart, we've also tested it for resistance on the RSI, meaning that the RSI yellow level and the price chart levels that I've drawn out are connected. Okay, so now we have a connection established here, so we can look for a trend. What is the trend? The trend is a trend that many people might miss at first. It took, in the 2013 cycle, okay, 480 days from the break of that RSI line on the monthly chart to the top of the bull market for Bitcoin to top out. So remember that, 480 days in this cycle. It took 420 days in the next cycle. It took around 360 days in the following cycle. And what we have here is a trend, believe it or not. First cycle, 480 days. Second cycle, 420 days. Third cycle, 360 days. What do you notice about those numbers? Each data point is minus 60 days, okay? 420 is 60 days less than 480. 360 is 60 days less than 420. So if we extrapolate that trend, we have to consider that it could be 300 days in this cycle from the break of that monthly chart level to the top. Therefore, 300 days from the break of that monthly chart level, which was in January, would take us to a top in around, let's go ahead and see, November this year. Okay, so there we go. There's one trend established already. One potential top date for Bitcoin supported by charts would be a top in this bull market in around November this year. Okay, so let's remember that, November this year. What about another theory? Because obviously we can't just base our predictions based on one theory, especially given the fact that we're attempting to throw out the entirety of Bitcoin's price action, the trend that's underpinned that, which is the 4-year cycle. We're trying to, look for an alternative. We can't just base it on one chart. Let's look for another one, okay? So another chart here, Bitcoin dominance. Bitcoin dominance obviously representing the strength of altcoins in relation to Bitcoin. When it goes down, we enter an altcoin season. Altcoin seasons only happen in cryptocurrency bull markets. So we can go ahead and measure how long altcoin seasons take from start to finish historically. We look at the altcoin season back here in 2017. We can see it took 300 days from start to finish. The exact same story here in this altcoin season in 2020. 300 days from start to finish. And that's if we're assuming the finish was the Bitcoin top, which was November, of course. If we assume it's going to occur again, 300 days from start to finish, and we assume that it started already, that would take us to a top in around January 2025. Okay, so now we have one kind of predictive formula saying the top's going to be around November 2024. We have one saying January 2025. This theory goes a little bit further. We can look into the total 3 cryptocurrency market cap chart. We can see we have a very important structural trend here forming. It's called the 5-step pattern, which is basically a trend that suggests that the pattern from last cycle, step 1 bottoming out, step 2 reaching the first high, step 3 consolidating, step 4 consolidating again, step 5 blowing off top into a parabolic bull market. It's assuming that that trend is playing out perfectly once again, which is a very good assumption to make because it's the reality, okay? That trend is playing out again. We are currently on step 4, and step 5 will be a parabolic bull market's new all-time highs. There's other elements to this trend we've looked at in the past. I'm not going to get into them too much, such as bull market support band, pi cycle. They all support this trend. The fact of the matter is there is a pattern here. The pattern is we are copying the exact cyclical structure from the last cycle, this cycle. Therefore, we can go ahead and take a date range measurement and see how long it took from the end of phase 4 to the bull market top. It took, again, 300 days, okay? Notice the similarity in number there. The Bitcoin dominance trend we just looked at, it showed us that it took 300 days from Bitcoin dominance top to Bitcoin dominance bottom. Again, looking at this structural trend from the total 3 cryptocurrency market cap, 300 days from the end of phase 4 to the bull market top. If that's going to occur again, it would take 300 days from the end of phase 4, which could be any second now, to the bull market top, which would bring us to a bull market top again in around April 2025. Okay, so we have multiple data points here forming. All right, so we have a data point on the Bitcoin monthly chart saying the top's going to be in around November this year. We have a data point on the Bitcoin dominance chart saying the top's going to be in around January next year. And we have a data point from this chart in total 3 saying the top's going to be in around April next year. So we're looking at November to April. We've narrowed it down even further in the past through various methods of analysis from around November to February. That's where I'd probably put the potential top date, November to February. I'll explain that a bit more in a second, but we need to look into one more thing, okay? And that is traditional markets. Because, unfortunately, without the 4-year cycle, we have very limited evidence on a predictive level to predict where that Bitcoin top will be. We have much reactive evidence, like we have lines, we have pi cycle lines, we have the Bitcoin power law chart, we have fear greed index, we have all these things that we can react to. If the top comes out of nowhere and we're like, oh wait, this actually is the top and we can sell. We don't have many things we can predict, and that's why it's very hard for me to come to a concise conclusion about where I think the top will be. There's just not the evidence, because all the evidence is underpinned in the 4-year cycle, but unfortunately that has faults this time. So let's look outside of cryptocurrency briefly. Let's look at the S&P 500 and traditional markets in general. Just before we do that, go ahead and check out our 3 exchanges, BingX, BitGet, and Bitunix. You can go down to the description below and click on either one of my referral links. to each exchange here. They will give you 15% trading fee discounts. You'll get access to an exchange that is already very low in trading fees, made cheaper by my referral link, and also have never been hacked before. They all fit different niches. Some of them are global non-KYC, some of them are KYC. It depends on where you're from, what you're looking for. They're all great exchanges. Use my links down below for discounts. Check it out. Let's get back into the content. Okay, what do we need to know about traditional markets? Well, the fundamental thing you need to know, we could go through all the bonds, we could go through, inflation, all this stuff, and I was actually planning on doing that. But now that I think about it, the thing that actually matters here fundamentally is interest rates, okay? In the last two major cataclysmic collapses, really, on the S&P 500 and on traditional markets in general, what really, what is the predictive method that we could have used to predict those collapses? Well, it's really just the pivot point, when interest rates pivoted downwards, okay? So we can see in orange here we have interest rates, and in blue we have the S&P 500. Look at the dot-com bubble. When did that crash start to happen? Around the pivot point of interest rates. Exact same thing in the global financial crisis. And right now, in a very similar situation, we're seeing the flat line of interest rates after a dramatic move up in interest rates. And if we see a pivot here, which according to the Fed's predictions, we will be seeing a pivot around November this year. That could very well lead to a downturn, much like it led to a downturn in the global financial crisis and also in the dot-com bubble. So again, when that pivot happens, which again could be around November this year, it changes around the prediction. It's not exactly certain when they pivot. It could be September, it could be November, it could be next year. But when that occurs, generally speaking, within a 2-month period, you see the market swing downwards, or at least that's been the case for the last 2 decades, okay? So that's another data point to consider, and it actually fits in quite well with our predictive methods we just discussed in the Bitcoin and cryptocurrency market charts, because obviously if the Fed pivots in November, which again is an estimation, but this whole video is an estimation, really, none of this data is concrete. If the Fed pivots in November, we will see allegedly a traditional market top within 2 months of that, which means between November and January, traditional markets will top. And as we know, when traditional markets top, within a month of that, Bitcoin generally tops as well. That's been the historical trend. So again, between November and January, we see the traditional market top. Bitcoin will top within a month of that. Therefore, between November and February, we'll see the cryptocurrency as well as macroeconomic top, based on the Bitcoin charts and also based now on the interest rates pivot estimations. So we can see that, although none of this data, none of this evidence is very strong, there is a large amount of loose evidence that suggests that Bitcoin will be seeing the top between, the end of this year, the start of next year. That's vaguely what it is. November to February, maybe even April, maybe even September. It's hard to say. It's very, very difficult to say. But the point of this video is to show you that 4-year cycle right now is weak. That's the reality. It's weak. It's also to show you that it's not within our best interest to assume the 4-year cycle is still intact. Even though we have no concrete evidence to say it's actually broken, because we can only really get that concrete evidence when it actually breaks. Even though there's no concrete evidence to say if it's broken, the fact of the matter is if we put all our eggs in one basket and expect the 4-year cycle to play out perfectly again, we will likely be in a situation where we're holding our bags downwards into a bear market, waiting for the October top that never comes, because the top actually came in the end of this year or the start of next year. Very important to understand that. But yeah, looking further into S&P traditional markets, why does the pivot on interest rates lead to a top? Okay, because realistically, interest rates going downwards is actually good for the economy in general, not necessarily for financial markets, because it's very important to note that financial markets and the economy are not the same thing. All right, they're not the same thing at all. But interest rates going down is great for the economy because it means the cost of debt is much lower. People can get mortgages, get cars, whatever it is. Companies can take loans at a much lower price, and therefore they do it more, and therefore the economy grows more rapidly. But again, financial markets and the economy are not the same thing. And generally speaking, in the financial markets, you will see people, front-running events. So, for example, the reason the market is moving up right now is because people know that interest rates will go down soon. And so they're buying in anticipation for interest rates going down. So when interest rates actually go down, we will see likely to see a sell the news event where the market starts to go down, even though that's great for the economy. Right? Very important to note that. Just putting it in context of previous traditional market cycles, okay? Look at the last cycle here, 2008 global financial crisis. Interest rates go upwards, okay? people buying in anticipation for interest rates going downwards. Interest rates go down finally. That's a sell the news event because they were buying in anticipation for that event. The event occurred. There's nothing to buy for anymore. The narrative's gone. And so the market goes downwards until interest rates flatlines and then starts building up again. All right. Now, that's obviously a very bad example because global financial crisis was heavily predicated on other events that were occurring. But that's the general logic of the situation. If you take it out of context from 2008, the logic of the situation is, again, why is the market going upwards? The market is going upwards because people are buying in anticipation for interest rates dropping. When interest rates actually drop, the buying in anticipation for interest rates dropping will go away. There will be nothing to buy for anymore, and the market will sell off. Will it enter a massive bear market? That's hard to say. Very hard to say. Considering we're basing all of this analysis of only 2 data points, because before that point, interest rates were very, up, down, up, down, up, down, very hard to predict. So it's very hard to say what the actual result will be, but it stands through logical reasoning that the result in the immediate term will be bearish, and hence that will drag Bitcoin into a bear market. Now, again, important to note, what will that bear market look like? We don't know, because this whole analysis that I'm doing here is basically estimating that the 4-year cycle will break. And we've only ever seen Bitcoin cycles occur within the backdrop of regular 4-year cycle theory and regular 4-year cycle structure. And so Bitcoin will be in the dark. Here's the thing, right? If we enter a bear market on Bitcoin in November this year, there's no reason to think that bear market will last 4 years, right? It could last 6 months. We could be at all-time highs again by the end of next year. So it's very important to note when people say bear market now, you almost need to remove your predetermined notions about what a bear market is. When I say that Bitcoin could enter a bear market between November this year and February next year, I'm not using the traditional format of what a bear market is. I'm not saying that Bitcoin's going to go down for 3 years, okay, and then go upwards again 4 years from now. I'm saying we're going to enter a bear market, and I have no idea what that looks like, and I have no idea how long it lasts, and there's no way to know. That's what I'm saying. So it's not as doom and gloom as you think, because, again, as long as the 4-year cycle breaks, there is a completely new market structure that awaits us that could be way worse than what it is now, or it could be way better. So it's important to note that, Bitcoin, cryptocurrency as a whole, we're on the cusp of a revolution almost in how potentially, if the 4-year cycle breaks, we're on the cusp of a revolution in how the market moves, specifically the cryptocurrency market. It could be absolutely terrible, or it could be absolutely phenomenal for the price. We're just going to have to wait and see. There's no amount of analysis that I can do that can confirm either of those scenarios. Could it be worse? Could it be better? I have no idea. No one does, because based on historical data, again, historical data is the only basis through which we can get any sort of predictive methods for the future in financial markets. That's how it works. Every single market pattern, every single market structure, every single predictive formula, they're all based on historical data fundamentally. We have no historical data for what happens after the 4-year cycle because it's never occurred. So when it breaks, we don't know what happens. So it will be really interesting, in my opinion, to see what the next couple of years look like for Bitcoin. I'm very, very excited to see it. But right now, what we need to focus on is this cycle right now. Currently, the date range trends are falling apart. The structural trends, however, are still intact. The structural trends still suggest we see a parabolic bull market, we see an altcoin season. We just don't know when that will top exactly. Vague predictions coming from vague data, say between around November this year to February next year. That comes from, again, Bitcoin data that we showed you today, as well as S&P 500 data. But it's worth noting, it is vague. I wouldn't be betting my life on it, that's for sure. But 4-year cycle at this point is also vague. So we're in a very new market environment. It's a scary but exciting market environment. And we're just going to have to wait and see what happens. And this is why I've always said, and I'll continue to say it. In the last year, I've said this now. We have to treat this cycle as a reactive cycle rather than a predictive cycle. Our fundamental strategy has to be reactive rather than predictive. Our predictive methods are severely limited given the fact that the 4-year cycle's predictive viability is severely limited, okay? So what can we do instead? React. When we see flashing indicators for tops in, when we see fear greed index going to 100, when we see Pi cycle reaching top, when we see Bitcoin reaching RSI resistance on the monthly chart, when we see Bitcoin breaking down below macro support levels, it doesn't matter what the predictive methods say anymore at that point. We just get the hell out because we know those predictive methods don't have reliability. Now, if we want to take our absolute dubious speculation even further, we can, ridiculously vaguely speculate about price as well, price tops. So again, we've made the vague speculation that the date top could be between November this year and February next year. Again, that is so vague. And I want to make it very clear. That is not the most likely scenario. That is if all of the scenarios are there and all the scenarios are, 10% likely to occur, that one's like 30% likely. You know what I mean? It's the most likely scenario out of equally unlikely scenarios. It's not like, oh yeah, I'm 80% confident we're going to see the top there. It's like, no, it's like if I had to guess to a gun to my head, that's what I'd guess, and I wouldn't be very confident about it. Very important to note, like, if we're in a cycle in which macro trends are evidently breaking left, right, and center, who's to say the trends we just looked at couldn't break as well? Let's just be very clear here. We don't know if they will. And again, this is why I literally just said we need to be more reactive rather than predictive. And a lot of people are just going to take me out of context and say, oh, Wolves of Crypto is predicting a top here and here. It's like, no, that's not really what I'm doing. I'm observing all of the equally hard to dissect scenarios and looking at the one that I can actually dissect in any sort of coherent fashion whatsoever and attributing more weight to that, and slightly more weight, while also saying, I don't know. That's what I'm doing. And that's frustrating, but that's what we're left with. The data is limited at this point. But if we wanted to take our speculation even further, we could do that. We can come to some sort of price prediction. So based on the November to February date range top speculations, we could put those date top speculations on this chart here, overlay it with this kind of macro kind of channel formation. It's like a logarithmic regression channel, okay? And what you'll notice is it's angle based. So we had, again, it's measuring angles from top to top and bottom to bottom. The angles from top to top have halved. So for example, 14 degrees is half of 28 degrees, assuming that will play out again. We've got a 7-degree angle. Again, 17 degrees is roughly half of 32, assuming that again, we'd have an 8-degree angle, which is roughly half of 17. So if this logarithmic regression plays out and continues to play out, which again is speculative, we don't know if it will, but if it does, and we do see the top, sorry, I just stuffed up the chart. If it does, and we do see the top between November and February, we'll be seeing a top between around 110 to 120k, just roughly. So again, 110 to 120k between November and February. That is like the most coherent argument I can make, and I'm not really that confident in it. But that's what I can say with the data I have. So I think that's interesting for sure. But I think we shouldn't take it much further than it being interesting. We should say, okay, 110 to 120k between November and February. We'll see how it goes. If we get to November and we're at 110k and we start to see top formations, okay, maybe we can then predict that's going to play out. But if we're in October and 130k, of course, we can't say it's going to play out. So this is really context. It gives us context and it gives us things to react to in the future. Again, very important to note, right? If I say that we're going to be seeing, we have that scenario where we'll see the top between November and February, and we are in November and we're at 110k, and the speculation was that we'd see 110k to top in November, then of course we're going to consider selling. Because this argument, which is what it is fundamentally, backs up the scenario. I hope that makes sense. Very hard to explain, unfortunately. The point is, these predictive formulas give us things to react to in the future if we need to react to them. So take what you will out of that. I hope you can get something useful out of it. But yeah, 110 to 120k between November and February will be something to watch, that's for sure. So again, we're seeing right now a revolution in how cryptocurrency moves and also how we behave in cryptocurrency. Potential revolution, because it's not confirmed yet until the 4-year cycle breaks, but in my opinion, it's likely. So we'll have to wait and see, guys. Thank you for watching. I hope you enjoyed. I hope this video wasn't too incoherent for you. I understand that it's a bit of a mess, this video, because it's very hard to explain. I'm talking about something very complicated here. I'm talking about the end of regular cyclical structure as we know it. It's a very hard topic to approach from any sort of coherent manner. So I hope you were able to piece together what I was saying here in the end. But thank you for watching. I hope you enjoyed, guys. Go ahead and check out the VIP group on Telegram for altcoin trading signals 4 to 5 times a week with a 77.51% win rate Also getting access to a VIP group chat where you can discuss the market with other VIP members and, get an insight there, chuck your charts in there, get their thoughts on it, and give your thoughts on charts as well. It's a very useful group, not only for the trading signals, but also for the group chat. Moving forward, exchanges. You're going to need an exchange if you're going to buy and sell cryptocurrency, okay? Pick one of these three, in my opinion. BitGet, BingX, or Bitunix. All those links are down below. The referral links, you can sign up with those referral links. It's my personal Wolves of Crypto referral link. With that link, you'll get a 15% trading fee discount for life, okay? So you're getting rewarded further trading fee discounts just free of charge there, as well as joining the community here. Giving back to the community. It really helps when you sign up with my referral link. Helps you with that referral link discount, but also helps me. So choose your exchange down below. The links are all there. Check it out. And then finally, the Crypto Academy Become a Trader 10-unit course teaching you how to trade. We've got a 10-unit course there, again, with Excel spreadsheets, with PowerPoints, with documents, all this kind of stuff. The bio, the description of the course is on the website. You can read up all about it, and you can throw us an email at cryptoacademycourses@gmail.com if you're interested. Bull market sale for a limited time currently, so a discounted price for a limited time. Check it out. Thanks for watching, guys. Hope you enjoyed, and I'll catch you in the next video. Cheers.